This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Tuesday, February 7th. Like many buzzy, fast-growth, high-risk industries, companies operating in and around crypto and the blockchain have relied heavily on venture capital to fund their activities. Venture capitalists, or VCs as they're more commonly known, manage pools of private money. What sets them apart from many other kinds of investors is that they tend to focus on the riskiest possible bets. For every 10 or so investments, they expect that some 8 or 9 of them might fail. But what keeps them in business year after year is that every now and then, one of those high-risk bets pays off spectacularly, covering the losses in the rest of the portfolio. Given their appetite for risk and reward, it's no surprise that for a while, VCs big and small were flocking to crypto. But what does the relatively depressed environment mean for VC investments in digital assets these days? Bloomberg reporter Hannah Miller joins me now to discuss. Hannah, always a pleasure to have you on the show.
Thank you for having me.
Let's talk about one of our favorite topics. I mean, I don't know if it's one of your favorite topics, but we do talk a lot about venture capitalists or VCs. And the reason we talk a lot about them is because they provide the, to use the buzzy word, the liquidity, to use the reality, the cash that crypto startups, especially right now, really desperately need to fund their ongoing activities. Now, one of the things I've appreciated about your reporting over time is, if you go back and you read the various things that you've written, it starts from this place of, here are signs that VCs are positive on crypto, but not like 100% invested, to 2022 Q1 all-time record high investments made into crypto, to 2022 fourth quarter when they're like, we're just going to pull it back a little bit. Not a huge amount, but some. What's the investor sentiment in venture capital right now? Like when you're talking to these folks and you're asking them, so all that money you put into FTX, regrets? ? How does that go?
Yeah, so I've always referred to venture capitalists as some of the crypto industry's biggest cheerleaders. So, they're definitely an important barometer for how things are going within the industry. And with this fourth quarter, venture capitalists are still investing in crypto startups. That's clear. Mm-hmm. There's just been a pretty sharp decline. So it was a 75% drop in the fourth quarter of 2022 compared to the same period a year prior. And, that's just like, that is a big plunge. It shows a pretty dramatic shift. And I think it's also showing a divide. We had a lot of big name venture capitalists who are very established. They're known for investing in a broad array of tech companies, and they kind of came into crypto, started backing companies like FTX. And now I think those generalist VCs are starting to pull back. They're like, all right, maybe this crypto thing isn't all it's cracked up to be.
And this is a point that you've made a few times, which is that there's this real divide between the phrase that you use, like the generalist VCs, right, who might have been investing in tech or in finance and who kind of came into crypto, and the kind of crypto native or crypto specialist VCs.
Yeah, 100%. These crypto native VCs are still sticking with the industry because that's their entire investment thesis. That's what they're staking on here. And, you're still seeing investments from those VCs. And so I think that, while we saw this, dramatic plunge, it doesn't mean that crypto is going away. There's still a lot of money, billions of dollars being poured into this industry.
How come?
So I think people still see use cases for blockchain, that they think the full potential of this technology hasn't been realized. And we've seen a lot of interest, in different types of startups that have cropped up in the crypto space. So maybe, it's a cybersecurity firm that audits your code and makes sure that it's not susceptible to hacks. Or maybe it's a gaming startup that uses NFTs in some way. So there are still people who see promise in this, and they think that, yeah, FTX was a setback, but that doesn't define the industry. There's also a lot of VCs who differentiate between centralized exchanges and decentralized entities and are really betting on DeFi. They're looking at decentralized finance startups, they're backing those versus centralized exchanges like FTX.
And for the VCs who are sort of staying in it, even if, as you note, not necessarily at the level that they were last year, how has their approach changed? I mean, as an industry, as a set of investors, they're supposed to be relatively sophisticated. This is definitely the story that they tell about themselves to the market, which is like, you want us in your, in your round, as it were, because we can help, we're smart, we can make connections. But some of that vaunted expertise seems to have gone right out the window when it came to asking founders tough questions about if they had any of the crypto that they said they had.
Yeah, so I think in the past, 2 years or so, VCs came into this that, they had to play a bit fast and loose in order to become a part of deals because things were moving really quickly. Valuations were white hot, they were huge. And venture capitalists, I think, were suffering from fear of missing out, FOMO. And, they were maybe willing to set aside some of their typical due diligence practices, some of the more intense questions that they would be willing to ask in order to move forward with a deal. And I think now we've seen a reset. I talked to a venture capitalist named David Pacman. He's a managing partner at Coin Fund, which is a crypto native venture fund.
You can tell by the name.
Yes. And, we talked about, the pace of deals slowing down.
I think we went through, obviously, a major market correction last year, exacerbated by a bunch of bad acting, self-harm in crypto that led to a lot of money leaving the space. I would classify some of that money as sort of tourist money that's chasing just momentum anywhere. But also, we saw some of the traditional VCs who had been
there are more traditional expectations now that maybe got thrown out the window previously. That there needs to be a board, there needs to be a board seat. It's definitely a sort of resetting of expectations from before.
Now, when we talk about things like VCs want to be on the board, what does that mean in practice?
Yeah, I mean, I think the fact that more VCs are demanding board seats again, post FTX, like that makes sense because FTX did not have a formal board. And that board would have been a safeguard, in theory, that maybe they would have helped keep things in check. We also know that a lot of the founders in the crypto space, including Sam Bankman-Fried, are extremely young. Maybe this is their first, big business experience. They haven't led a company before. So having a board in place can help, provide guidance to young founders. It can also, make sure that they're not engaging in unsavory or just ridiculous business practices, like keeping all of your accounting on QuickBooks. But yeah, I think, moving ahead, this kind of seeing which companies have boards, which don't, that's going to be a very interesting thing that actually we're looking into as a team.
And one of the points that David Pacman made in your interview with him is this idea that some of these crypto companies, especially in the FTX vein, were doing too much. Now, obviously, he's a person running a specialist crypto fund, so he's going to be a fan of narrow portfolios. But is there anything to the idea that, you have these entities that are run by relatively inexperienced folks? This may be their second or third real job, quote unquote, out of college. They're raising billions of dollars and suddenly they're in gaming, in centralized exchanges, in DeFi, doing token offerings over here and their own investments over there. Is there suddenly kind of a in praise of simplification vibe going around the valley?
Yeah, I think it's been interesting to see, that there are some areas within crypto that have a lot of resilience. So even just going back to basics, like developing, blockchain infrastructure, things that can help with trading, stuff like that. That's a little maybe it's less sexy than creating some massive centralized exchange, but still a vital building block within the world of crypto. So yeah, David mentioned that, that infrastructure is a pretty key area right now.
And you're asking, what are we focused on? Those people tend to be deep in the infrastructure build out right now. We have base layers, layer ones, which is a layer for decentralized compute and really record keeping. But we don't fully have decentralized storage. We don't have fully decentralized databases. We don't have decentralized personalization. We don't have decentralized AI. These are pieces of the tech stack that are readily available in Web 2 that need to be built out.
I think it's been interesting to see that, startups that might not necessarily identify as crypto startups, that they're gaming startups, and maybe use some element of blockchain, like they have non-fungible tokens in the game, something along those lines. Those have seen some resilience over the past few months. So I think, thinking more specialized, thinking smaller, those are things that are helping founders, as they scrounge up funds during this difficult time.
Up next, more from Bloomberg reporter Hannah Miller on what this ongoing crypto winter means for crypto VCs. We'll be right back. We did ask for folks to tell us if they had any blockchain games that you liked. The people did email, so I'm gonna mention a couple of them. So, one person talked about Metalcore, another person talked about Hunters on Chain, which does have an NFT element. There are other folks who kind of made the point that you did, which is instead of folks being like, this is a blockchain-based game, it's like, this is a game that has some crypto elements. It might be NFTs, it might be crypto. And I was talking to the developers of a game that's still very much in kind of like alpha, early beta, where, they were like, the NFT elements of this game are not the point, right? Like, they're there to be an interesting add-on or an interesting incentive, but they're not the point. And so perhaps one thing that we'll see is more pure play gaming startups that, dabble in blockchain rather than the other way around.
Yeah, I think when I've talked to a lot of gaming developers who are experimenting with blockchain, they want blockchain to be in the background. They don't want to be so in your face that this is a crypto game. This is, an NFT game. They want it to just be an element, and that the gameplay overall is smooth. It feels like a normal game. It's not clunky in any way. So I think, in talking to people who are maybe switching over from traditional gaming into blockchain gaming, they want to take a traditional gaming feel and, improve that with blockchain, but have it sort of be on the down low, if that makes sense.
Absolutely. And kind of as a kind of a closing thought, venture capital is a relatively small industry. There's hundreds of billions of dollars in capital here, but it's, it's roughly the same, 100 or 150 so people around the world, many of whom have been personally as well as professionally burned by the results of the last several months. And this conversation is happening around the same time when many of the vaunted tech companies that were also fueled by venture capital are having their own, reckoning is too strong a word, but at least questions are being raised about the sustainability of their various business models. Is VC sort of doing its own kind of like internal interrogation and asking like, are there things that the industry needs to change, whether it relates to crypto, whether it relates to tech, but just overall to, continue to be sustainable and successful in the future?
Yeah, 100%. I think VCs are evaluating their practices. They're looking at what went wrong here. We know there's also outside pressure that regulators are looking into the role of VCs and the collapse of FTX, that they're, talking with them, questioning them. So that, I think, is just an added pressure on all of this. But yeah, this is a reckoning. This is something that, isn't unique to crypto, that venture capitalists are looking at the role that they played in pushing these companies to a very high point, maybe too high a point, maybe past realistic expectations. And they're now, reckoning with the consequences of that.
And I'm sure you'll continue reporting on those consequences. Thank you as always for being on the show.
Thank you.
That was Bloomberg reporter Hannah Miller. You can find more of her reporting in the Bloomberg terminal and on Bloomberg.com. And she also pops up in our twice-weekly crypto newsletter called Bloomberg Crypto, so make sure to subscribe. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicki Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Beriro. Our associate producers are Ty Butler and Moses Andam. Desta Wondirad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.